Due to the circumstances in the market this morning, this week's video is going to be completely different, as last week's returns are essentially irrelevant. As we're shooting this video, trading has already been halted one time this morning, and we wouldn't be surprised if it happened again. So in this week's video, we're going to cover the only 3 news stories that matter, in our opinion. You're not going to want to miss it. Now we have 3 major news stories, and all of them are centered around the coronavirus. First, we have 10-year treasury rates under 1% for the first time ever. And actually, we're sitting under 0.5% interest rate right now. So therefore, if you wanted to buy a 10-year treasury, you would get 0.5% interest rate every single year, and you have to hold it for 10 years. We've never seen something like this before. The second news story is what happened to oil over the weekend. OPEC had a production meeting last week due to their concerns over the coronavirus. Saudi Arabia wanted to cut oil production by 1.5 million barrels per day, but Russia disagreed. After the disagreement, Saudi Arabia said, fine, we're going to slash prices by 10% on all exports. And what we saw overnight on Sunday was a complete price war. Oil dropped by almost 30% at one point during trading. This is the largest drop that we've seen in oil since the 1991 Gulf War. The last thing we wanted to cover was the catalyst to everything, the coronavirus. Currently it's being reported that it's in 30 states, but we wouldn't be surprised if it's in all 50 at this point. We have over 500 confirmed cases, at least 22 people have passed away, 19 of them are in Washington. In New York City, we have 8,000 people in isolation as their fears are that they have the virus. Schools are closing down and a state of emergency has been declared. Globally, we have over 100,000 cases and we're approaching 4,000 deaths. Italy is essentially shut down and their stock market's closed. So the craziest coronavirus story that we've heard so far is what happened in Iran. Iran decided to release over 50,000 prisoners, so the coronavirus didn't spread throughout the jail system. Now, they said this would only be temporary, so it sounds like an interesting plan. We'll see how that works out for them. Now that we got the news out of the way, we wanted to take a look in at the S&P 500 to see how all 3 of these news stories led to the historic open.
The chart today is of the S&P 500, but before I get into describing what's going on in the chart, I want to talk a little bit about all the volatility that we saw last week. Now, the S&P 500 ended the week, last week, up about 0.6%, but there was a lot going on under the surface. On Monday of last week, the S&P 500 was up 4.6%. On Tuesday, down 2.81. Wednesday, up 4.22. On Thursday, the S&P 500 was down 3.39. And on Friday, the S&P 500 at one point was down about 4%. But towards the end of the day, there was a furious rally where the market only ended up down 1.71%. Now, this all added up to the market, the S&P 500 being up about 0.6%, but what we saw was historic volatility that I personally have never seen. Now, it's Monday morning when we're shooting this video, and at the open, the S&P 500 actually got halted as it hit -7% within the first few minutes of trading, which is one of the worst opens that we've seen in a long time. Now, if we're looking at the chart, this is actually a weekly chart that goes back to January of 2017. And again, this is as of about 10 a.m. on Monday morning. And what I want to do is focus on the white lines on this chart, as those are either key support or resistance levels that we're keeping a close eye on in the S&P 500. Now, the all-time high on the S&P 500 was around 3,400 that was hit a few weeks ago. And as we're shooting this video, as I said, the S&P 500 is around 2,800. Which is about a 17% drop in just a few weeks. So next, as I said, I want to take a look at the white lines, which are some of the key resistance and support levels from where we are today. The top white line on the chart is the first key resistance level that we're watching for the S&P 500, and that's right around 3,000. So if we can see a bounce out of the S&P 500 here, then that's the first level that we're keeping an eye on to see if we can break through and make another move higher. Next is right around 2,800 is where we currently are on the S&P 500. And that's the second line from the top. Now, what happens here with the S&P 500 around this 2800 level is going to be very key to see if we may make a move higher, closer to that 3000 line again, or if we may see a continuation downward. The next two lines on the way down are key support levels that we're watching, and those are at 2700 and around 2550. And the last and final bottom white line, around 2300, is the bottom level support that we're keeping our eye on. And that's level from the bottom of the fourth quarter sell-off in 2018. So what happens here around this 2800 level is going to be very important, as this may be a telling sign of where the S&P 500 may be going, whether higher or lower, over the next few months.
Thanks for watching, and if you find this content valuable, please share our video. Also, during volatile times like this, one of the best things that we can recommend is a portfolio review to assess exactly how much risk you're taking. So if you'd like us to help you out with that, please give us a call at 814-580-9881 and we'd love to help.